Most people think that having life insurance is just for people with young families or during their working career. But is that really true? In retirement, the reasons to have life insurance may change, but they don't necessarily disappear. I've got a few reasons you may want to hold on to that life insurance during retirement. That and more coming up. My name's Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Life insurance is often thought of as an income replacement tool, so that during your career, something happened to you and there are people that are dependent on your income for their livelihood. There's an income replacement, a lump sum that is provided to them when your income stops. But also, in addition to being income replacement, we often say life insurance is there to fund unfunded goals. So if you have a goal of paying off the house, paying off the mortgage, or a goal of helping the kids with college, maybe a goal, right, of saving up for retirement and being free from that paycheck, then during your career, you've got a lot of those unfunded goals and you need life insurance there if something happens to you to be able to fund those unfunded goals. Well, with those primary priorities for life insurance, replacing lost income, funding unfunded goals, does that mean when you get to retirement, you really don't need life insurance? You've stepped away from that steady paycheck, so that income replacement goes away, and your goals are basically met, right? You've reached financial independence, so therefore, do you not need life insurance? Well, for many people, that may be the case, but there are some reasons why you may still need life insurance during those retirement years. I've got 3 plus a bonus one you may need to consider with your CFP. And the first is there may still be income that you need to replace if your spouse or you pass away. Think about it. If you're both drawing Social Security, you and your spouse, when one of you passes away, the survivor gets the higher of the 2 Social Securities, which, by the way, is a fantastic benefit. But oftentimes when we tell people that, they're surprised. They say, well, wait a second, my Social Security is $3,000, my spouse's is $2,000. That would go a long way if we were able to have both if one of us passed away. And unfortunately, that's not how it works. In that scenario, one of those Social Securities would go away. You'd get the higher amount, the $3,000. And if depending on what else you have saved up and what that income and retirement plan looks like, there may still be a need for life insurance to replace that lost income. So Social Security is one. The other is a pension. And I know those are more rare these days, but for those that do have them, whether it's a small amount or a large amount, it's a consistent form of income that's going to show up every single month. And if you pass away, does that income stop? Oftentimes when you're drawing your pension, when you're selecting to turn that benefit on, it's making one of the biggest financial decisions of your life in deciding, is this life only, the highest monthly amount, or is it 100% joint survivor, a much smaller amount, but that amount will continue to be paid out if you passed away? And then there's varieties in between. At that moment, you don't realize that you're buying life insurance, but that's essentially what you're doing. The difference between that life-only amount, meaning when you pass away, that pension stops, and the 100% joint survivor amount, meaning when you pass away, that same amount will continue for your spouse. You're giving up a chunk of income every single month. Your pension's significantly lower if you draw that 100%. Well, what financial instrument sounds like, well, if I give up a little bit of money every single month or every single year, there will be a financial benefit to my family if I pass away? Life insurance. And therefore, looking at life insurance, if you have a pension, before making that selection, so that you can determine, well, should I do 100% joint survivor, or does it make more sense to draw the life only, but then have life insurance there that if I pass away, my pension stops, but I would then have life insurance injected tax-free to my heirs and my spouse. So that's the first reason. Yes, it's there during your career to replace lost income, but that might be needed depending on your situation in retirement as well. Second reason to possibly consider still having life insurance in retirement is to leave a legacy or to balance out or equalize inheritances. Think about this. If you have a goal of leaving an inheritance to the kids and you're also, have no idea and want to live as long as you possibly can, how can you ensure that there is some sort of inheritance left to your kids? Well, it's possible you could buy a life insurance policy, either one and name each of them as beneficiaries, or multiple and have a policy for each of those kids. Especially in a second marriage or a split family, this life insurance can really diffuse what would otherwise be a very tense situation. Wait a second, when after dad died, you've remarried, and now if you pass away, all of the assets that you and dad built are going to go to your new spouse and his family, right? Well, no, that's obviously you're building a life together, and so that may be appropriate, but a way to make sure that the kids are taken care of is to have life insurance, and that really diffuses what otherwise would be a tense situation. This also helps significantly if there's a family asset, like a business or a property that really is only going to go to one individual because either they've been working in that business or they've really taken care of that property. And so listen, we want to leave the lake house to Jimmy because he's really been doing all the maintenance, been doing all the work for it, and we want to leave it there. Well, that's an enormous asset. And do you want to be in a position where one child would need to buy out the other child? If so, that could be financially detrimental or even not possible. Well, a way to equalize that or level that out is buying life insurance. And yes, you'd have to give up a little bit of income every single year or pay that premium, but it could really solve a lot of issues for the second reason of leaving an inheritance or equaling out that inheritance. And then the third reason to have life insurance, maybe, depending on your financial situation in retirement, is to pay taxes or to pay debt. To pay taxes or pay debt. And so even though right now, while I'm recording this, there's a lot of negotiations going on in Congress about a new tax bill that likely will not allow tax rates to sunset, the current tax laws to sunset, and therefore the estate tax exemption is likely to stay elevated, likely to stay high. It's still possible that could change. It's still possible that you may live in a state that has inheritance taxes. If that's the case and you don't want to be in a position where your estate would need to liquidate assets to pay those taxes, having some life insurance enter into the estate so that it can fund those taxes and preserve that estate and inheritance for the family, that can make a lot of sense. Or if you're entering retirement and still have debt, and you don't want to force your heirs to sell a property to pay off the debt, or they may not have the income that you have in order to support the debt and service the debt, and therefore having some life insurance that creates some liquidity right at that event so that they can pay off that debt and kind of clean that up can make a lot of sense as well. And then finally, the bonus reason why you may want to have life insurance in retirement, and this was the primary reason just a generation or so ago, it's not as prevalent these days, and that is to pay final expenses or burial expenses. And why that's not as prevalent today is because fewer people are living on just Social Security and a pension in retirement. More people have saved up in the 401ks and saved up in the assets, and those assets will be there to pay those final expenses. The different way of approaching it right now is to pre-plan and pre-fund a funeral. When you do that, if you pre-plan, then you've made all the decisions, you've made it very easy on your heirs. But if you also work with a funeral home to pre-fund, you're making a payment at that time, at the time you do that planning, and that funeral home assures that you will have a burial and all the arrangements done at whatever level and specification that you decide. Well, how can you make a payment at one point and a funeral home say, we assure you will get these specifications at whenever you pass away? How can they do that? It's life insurance. They're actually buying life insurance that's going to fund all of those expenses out there in the future. So a bonus reason, not as prevalent these days, but still a reason why you might need some life insurance in retirement, final expenses, and prepaying your funeral. Life insurance in retirement, not for everyone, but depends on your specific financial situation. Work with your certified financial planner on that. See if any of these 3 + 1, really 4 reasons apply to you. Work with your CFP on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or send us an email, info@korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.